we're going to be sticking to essentially the same language, probably sticking to that 2% inflation target. Isn't it really just become, I guess, stubborn, dogmatic, obdurate in doing that? Why not just relinquish that? Because ultimately, asset purchasing has been going on for so long there. Is it making any difference at all?
I think in terms of symbolic-wise, it's still important for the Bank of Japan to maintain 2% inflation target, although almost nobody believes that we can achieve 2%. So at this moment, the issue is how to maintain the stock market and financial market stability. And so if the BOJ will show some, accept that 2% is not achievable, and then let's get rid of it, that may have some, give us some hawkish message to the market participants. So that's what they worry.
Well, absolutely. And Sayuri, just, at the end of the day, I think the Einstein definition of insanity is doing the same thing over and over again, hoping for a different result. They're not getting that different result. Is there something you would be doing if you were BOJ chair?
Well, if we look at what's happened over 8 years, what BOJ is doing, they are gradually, introducing flexibility, and they are no longer doing massive quantitative easing. And then in March, they increased this 10-year yield target range to the 0.25%, and then they decided to intervene in the stock market only under very stressful environments. So by doing that, BOJ is really trying to move somewhat toward normalization. So they are actually changing their action, but quietly.
Sayuri, one of the key questions being asked right now is whether or not the BOJ will continue with its COVID aid beyond September. What's the sense you're getting? What are you expecting? Does Japan Inc. still need it?
Yes, for the small medium enterprises, like Catherine said. I think, overall, the credit demand from the private sector is slowing down. And therefore, the mega bank is no longer lending aggressively. But the small companies, they are still suffering because until this Sunday, we have a state of emergency starting from this January. And, restaurant, hotel, they are really suffering. So they need to get some support. And then government also extended their this extension of the financing to the small medium enterprises. They are lending without collateral and zero interest rate. So Bank of Japan needs to make the same adjustment in line with government.
What assumptions are you making about the movements of the yen going forward? A weaker yen has helped to boost exports, helping to cushion the economy. Do you expect a stable yen-dollar to persist from here?
Moving around the 110 at this current rate is quite good. And actually, manufacturing sectors are doing quite well. Their sentiment is getting very high. And because export and capex investment is taking place. However, because of this shortage of semiconductor chips, we started to see some slowdown in the export in the automobile sector. But otherwise, manufacturing sectors are doing well. And we can have this stable yen-dollar rate at 110. It certainly helps their profits to improve.
Sayuri, do you think that the national government should be doing more here and do more of the heavy lifting, or do you think that they're doing enough?
So government is thinking to do some additional supplementary budget this summer, partly because they have to do general election coming in September. So I guess they want to get some public support. So they are going to provide some kind of additional measures. But it's not going to be a very large scale compared to last year because I think they still kind of worry about this rising big debt and deficit.